The automotive industry in North America is in a state of uncertainty. Trade tensions between the United States and Canada have escalated. This has sent shockwaves through the integrated supply chains of car manufacturers. The US, under the leadership of President Trump, imposed a hefty 25% tariff on most Canadian imports. This includes vehicles and auto parts. The stated goal? To protect American jobs and boost domestic manufacturing. Canada, however, refused to back down. Prime Minister Trudeau, a staunch advocate for free trade, retaliated swiftly. Canada imposed its own set of tariffs on a range of US goods. The automotive industry found itself caught in the crossfire of this trade war. The tariffs threatened to disrupt the delicate balance of production and consumption. This impacts both sides of the border. The situation is further complicated by the fact that the auto industry is in the midst of a technological transformation. The shift towards electric vehicles is already underway. Established players like Ford and GM are investing heavily in EV production. New entrants, most notably Tesla, are challenging the status quo. The trade war adds another layer of complexity to this already volatile landscape. Tesla, the electric vehicle pioneer, finds itself in a particularly precarious position. The company relies heavily on imported parts, including batteries. US tariffs on Canadian imports have increased Tesla's production costs. Canada has responded with measures against Tesla, including a proposed special tax. Tesla's stock price has fallen and investors are worried. The company faces a tough choice: absorb costs or raise prices. Meanwhile, the Canadian government is looking to capitalize on the situation. They aim to bolster their domestic electric vehicle industry. There is talk of introducing tax breaks and other incentives for companies that manufacture EVs in Canada. This could be a game changer for Canadian automakers. It could level the playing field and give them a competitive edge in the burgeoning EV market. The Canadian government's focus on promoting locally produced EVs is not solely driven by economic considerations. There is also a strong environmental imperative. Canada has committed to ambitious targets for reducing greenhouse gas emissions. Promoting the adoption of electric vehicles is seen as a key part of achieving these goals. The potential tax breaks and incentives are already generating interest from automakers. Both established players and new entrants see an opportunity to gain a foothold in the Canadian market. For Tesla, this presents both a challenge and an opportunity. While the company is undoubtedly a leader in the EV space, it faces stiff competition from established automakers with deep roots in Canada. Section 4. Navigating the storm. Tesla's potential strategies. Tesla is not standing idly by. The company is exploring various strategies to mitigate the impact of the trade war and maintain its market share in Canada. One option is to lower prices on its vehicles. This would make them more attractive to Canadian consumers despite the tariffs. This approach, however, would eat into Tesla's already thin profit margins. It could potentially hurt the company's long-term financial health. Another option is to establish production facilities in Canada. This would allow Tesla to avoid the tariffs altogether. It would also make the company eligible for Canadian government incentives. This approach, however, would require a significant capital investment. It would represent a major shift in Tesla's global production strategy. The decision of whether to lower prices or shift production to Canada is a complex one. It involves weighing short-term financial considerations against long-term strategic goals. Tesla must also consider the broader political and economic landscape. This includes the potential for the trade war to escalate or de-escalate. Section 5. The road ahead. Uncertain future for Tesla and the auto industry. The trade war between the US and Canada has created a great deal of uncertainty for the automotive industry. The tariffs, retaliatory measures, and shifting political landscape make it difficult for companies to plan for the future. Tesla, with its reliance on global supply chains and its position as a leader in the EV market, is particularly vulnerable to these disruptions. The coming months will be critical for Tesla and the auto industry as a whole. The decisions made by companies like Tesla, the actions taken by governments in the US and Canada, and the reactions of consumers will determine the shape of the automotive industry for years to come. One thing is certain: the road ahead is likely to be bumpy.